On June 12th, SpaceX just launched its IPO, making it the largest IPO in history. A couple of people asked me, was I buying SpaceX? And I said no, but I didn't give a reason. So today I'm going to give three reasons, one, two, three, why I'm not buying SpaceX. So before I go forward, make sure you hit that like button, subscribe, and share this content, okay? All right, so reason number one that I'm not buying SpaceX is scarcity. So let me explain what that means. There's a saying that's kind of etched in my head from the miseducation of the Negro. When Carter G. Woodson said that if you can control a man's thinking, you don't have to worry about his actions. In Dr. Robert Cialdini's book, Influence, The Psychology of Persuasion, he talks about these 6 weapons that are used to influence people's behavior, whether it's to get you to sign up for their services, buy their products, choose them, whatever. So one of those is scarcity. Now, scarcity can come in respect to numbers. We used to see it all the time on the Black Friday sales. Like, hey, come in, we got this 60-inch TV for $99, but we only have a limited supply. So make sure you're the first one through the door. So everybody would line up for the Black Friday sales because it's scarcity. There's only a limited supply. Also, scarcity can come in terms of time. You see when people doing promotions, oh, it's 20% off, but this sale ends at midnight. You have a limited time to get there. So that happens when people are trying to get you to act and do things very quickly. So even with SpaceX, when it was released, a lot of people have this thought process that they have to run and buy the stock the first day. There's no need to run out and buy the stock the first day or the first week or the first month or the first year for that matter. So that's number one. And also, when they released the IPO, there was only a limited number of shares that were available to the public. So that made it even more scarce. So everybody's running out trying to buy it, which also makes the price shoot up. When there are more buyers than sellers, the stock price is going to rise, and vice versa. If there's more sellers than buyers, the stock price is going to fall. So that's number one, scarcity. There's a whole thing of scarcity to make you to act and act quickly and make you think that you're doing something just because of that aspect of it. Number two, the reason is the lockup period. Now, the lockup period is typically when there's an IPO, the early investors have a specific amount of time that they have to hold a stock, that they cannot sell it, because if they sold it, then that would cause a lot of volatility up front, or the stock price could go down, whatever, things can happen. So for SpaceX, their lockup period is like this. Here's the details. So the early investors may sell as much as 20% of their holdings as of the second full day of trading after the next earnings report. The next earnings report is going to be in August, so they really can't sell any shares until August. So if everybody comes in and buys, the stock price goes up, the early that's one thing that would benefit the early investors, the people who are able to invest pre-IPO. So they can sell as much as 20% of their holdings as of the second full day of trading, which after the second quarter earnings in August. At that point, investors may sell an extra 10% if the stock trades 30% higher than its IPO price for a minimum of 5 to 10 days following the earnings report. So it behooves them, if people want to get out and they want to sell that extra 10%, that the stock price is 30% higher than its IPO price, which was $135. So people are going to do some things to try to make sure the stock price goes up. So that can happen as well. Not saying it will happen, but that's something that's possible too. People can promote, push, so that the stock price goes up so the early investors can cash out. Investors may sell 7% of their holding at each of the following points: at the 70, 90, 105, 120, 135 days post-IPO. So they have certain time periods where they can unload the stock little by little. Investors may sell 28% of their shares as of the second full trading day after SpaceX's third quarter report. So if the second one is August, September, October, November. So the third one will probably be in November. So they can sell 28%. So they can sell 20% after the second, 28% after the third. And then finally, investors may sell as they wish after 180 days. So after 180 days, the stock price will kind of balance out, because at that point, early investors can get out if they want to, they can sell if they want to, and there are a lot more shares. So things can go from that particular standpoint. And number three, which is the most important one to me, is valuation, or typically the fundamentals of the business. So I always look at fundamentals. I am not a technical analysis. I do zero technical analysis. When I buy a stock, when anybody buys a stock, really you're buying a piece of a business. So the most important thing to me is, how is that business functioning? Because that's what I'm buying. I'm buying ownership in that business. So we're going to look at SpaceX, and I'm going to use it in comparison. I really don't like to compare stocks one against the other, but I'm using these numbers as a comparison aspect of it to show you the difference between three companies that I do own and that I am buying versus one that I'm not buying. So those will be Broadcom and Nvidia, which I've owned since 2020, and then Micron, which I just bought for the first time on March 30th. And I'm going to make a video about that, because Micron has been really going through the roof, but we'll talk about that later. All right, so now if you look at these numbers, SpaceX, Nvidia, Broadcom, Micron, and some of the numbers that are very important to determine whether or not I'll buy a company. Just the first one here is net profit margin. So net profit margin would be, so for SpaceX is negative 45%, Nvidia 62%, Broadcom 38%, and Micron 41%. So net profit margin would be like for every dollar, like say Nvidia is 62%. So for every $1 revenue, 62% is kept as net profit. 62 cents. So 62 cents out of every dollar is kept in net profit. SpaceX is on turn losing 45 cents on top of the $1 revenue. So I don't invest in companies that don't have that are not profitable. That's something I learned back in 2020 when I watched a lot of stocks go up and down. That I don't invest in non-profitable businesses, and that has saved me a lot of time, a lot of effort. Even when you see stocks going up, like if you go back to 2020, there were a whole bunch of them that just ran up, from the Pelotons to the Bed Bath & Beyonds to the AMCs to the GameStop to the EV companies, Rivian, and there actually was a chart on the TV this morning about Rivian. If the first 3 days after its IPO came out versus SpaceX, how much it went up the first 3 days. But if you look at what Rivian has done in the last 5 years, it was horrible, because it was, number one, it was never a profitable company, but everybody got caught up in Rivian and Neo because they were electric vehicle companies, and that was a new wave. The marijuana stocks at one point were flying high, no pun intended. So, and the same thing, when the businesses are not profitable, over time, the stock price is going to match the business. So what's happening in the business is very, very important. All right, so cash flow margin. Cash flow margin, typically like 10 to 20% would be good. 20% to 25% would be like strong cash flow margin. So for every revenue, that percentage is how much cash they generate. So you can see Nvidia 56%, Broadcom 37%, Micron 45%. Forward price to earnings ratio. Typically for price to earnings ratio, the lower the better. So you can see Nvidia's 23, Broadcom's 33, Micron is now at 16. When I first bought it a few months ago, it was like 6, but the price is going up a lot. Broadcom, SpaceX has a negative 141 price to earnings ratio. If it's not expected to earn anything and the earnings are negative, then you're going to have a negative price to earnings ratio. The EPS, the earnings per share growth forecast, these numbers came from Charles Schwab, and I've noticed that they do a lot of great stuff with the numbers that are pretty accurate over a short period like that, 3 to 5 years. Nvidia 51%, 52%, 159% for Micron, and that is phenomenal growth. Typically, and a lot of times the growth of the earnings correlates a lot to the growth of the stock price over time. And over the last 6 years since I've owned Broadcom and Nvidia, the stock has grown at 50 to 60% a year. And since that time, it's actually been growing at 50 to 60% a year for the last decade. Micron, 159%, that's phenomenal growth. Price to sales ratio, again, the lower the better. SpaceX, 109, NVIDIA, 19, Broadcom, 24, Micron, 9. So that 109, that's ridiculous to me. The revenue has to grow typically over 100%, in my opinion, to match or to make that even seem sensible. I don't really think that's possible. The PEG ratio, that's the price to earnings growth ratio. Typically, a number under 1 would be considered very, very cheap. NVIDIA right now is 0.61. For its growth, if you look at go back to up to the earnings per share, you look at 51%. The price to earnings ratio is 23%, so it's very, very low. It's less than half of the earnings forecast. With a PEG ratio of 0.61, NVIDIA is probably cheaper than any time since I've owned it. I've owned it since 2020. Broadcom 1.21 PEG ratio. Micron still very cheap at 0.29. As I said, a PEG ratio above 2 would be a stock that's expensive. 1.5 or less I'm comfortable with, but 1.25 is something I get really excited. If you have a PEG ratio of less than 1, that typically means the stock is really, really cheap. Revenue of the trailing 12 months. So these companies are all 1 trillion or 2 trillion or 5. So SpaceX, being listed as a quote-unquote $2+ trillion company, only had $19 billion in revenue. And, of course, everybody's forecasting its revenue and stuff and what it's going to be years from now. I can only go by what I see today. 253 billion, 75 billion, and 58 billion. Net income, -$9 billion. So they lost the net income. This is the net income available to the shareholders, -$9 billion compared to the rest. Free cash flow. Free cash flow is like the cash is left over after you paid your operating expenses and your capital expenditures. So it's like the cash is left over after you paid all your bills. So there's this -$19 billion, and you can see the rest. So for me, it all comes down to the business. That's what matters, because that's what you're buying. It's not about the stock price. So that's two things I haven't mentioned. I haven't mentioned the stock price, and I haven't mentioned Elon Musk. Most people are buying it based on the Elon Musk factor. But I can only buy it based on what the numbers say. And because when I buy a business, I'm not buying it because I think I'm going to sell it when it gets to a certain price. I'm buying it because I believe that it has really, really good compounding potential for a long period of time. I don't see that with SpaceX right now. So, I mean, could that change in the future? It could, but as of right now, I don't see it. So I would rather put my money where I feel extremely comfortable, because the business and the numbers tell me. And then, I've done it before, so I know the numbers tell me exactly what the business is doing. And over time, the stock price follows the business. So we shall see not what the stock price is in 3 months or 6 months, 1 year, but how is it 5 years from now? That's what's important. All right, so remember, go out, look to own great businesses. That's what I look for, owning great businesses. Don't get caught up in the hot, new, shiny thing just because. Now, this is not any recommendation for what you should do, because you have to make your own decisions and do your own research. For me, I trust in my research because I put the time in. And by putting the time in, I'm trusting in the research, and I do what the research tells me. And the research tells me that as of today, stay away. All right? I will talk to you soon. Have a great one. Subscribe, and share. Thank you so much. All right, talk to you soon.